The Federal Reserve is leaving interest rates unchanged for now. The borrowing rate is currently between 4.25% and 4.5%, where it has been since December. But there could potentially be as many as 2 interest rate cuts later this year. CBS News MoneyWatch correspondent Kelly O'Grady pressed Chairman Jerome Powell on the Fed's decision not to change rates.
What made you feel comfortable cutting then when inflation was higher than where it is today and you didn't cut today?
Well, the forecast for inflation in December was 2.5%. Core PCE for 2025, the forecast was 2.5%, which was a good inflation forecast. I think what we've learned is that, and this was long before we had any idea of what the actual policies would be, we've learned that the tariffs are going to be substantially larger than forecasters generally thought.
And Kelly joins me now. Kelly, what more did Chairman Powell have to say?
Yeah, I'm glad you played that soundbite, Meg, because I think a lot of people were confused of, well, we lowered rates in December, but we actually had higher inflation than we do now. And we still did have the sort of uncertainty of all the tariffs. And, you know, his response, of course, as you heard, right, it's higher inflation potential in the future, the potential, because we don't actually have that hard economic data yet. And so I did press him further and I said, well, when does this wait and see approach actually hurt Americans rather than help? Because, of course, Americans are looking for lower mortgage rates, lower auto loans. Small businesses are looking for more manageable rates when it comes to loans. Here's what he had to say to that.
Well, I mean, we're trying to restore price. Best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price stability, meaning 2% inflation on a durable, sustainable basis, that, and also maximum employment. If we restore those things, that's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver.
And he went on to say there is just so much uncertainty about the tariffs. They're not really sure how they're going to have to react, and they're going to have to wait for the data to come in. Meg, I'll also note he added a point on the data that's got a little bit of traction in the news right now, that they are seeing some sort of budget cuts and some layoffs across the economic research space that they do think in the future could potentially impact the sort of strength of that data, but they're not seeing it now. But yeah, a lot of things said today, but I think probably the big takeaway, Meg, is wait and see.
Wait and see. So is there any way to answer this next question then, Kelly? What should people at home expect to see in the months ahead?
I know, right? I think everyone wanted to know that from Chair Powell in the room today. Based on their projections, as you said at the top, we are still expecting to see 2 interest rate cuts this year. And based on their projections, we're also expecting to see unemployment tick a little bit higher, as well as inflation tick a little bit higher. Realistically, the tariff policy is changing so much, and how companies are going to react to that, whether they absorb some of that cost, pass it on to you and me, whether if they absorb that cost, that means that they have to find areas to cut in other places, meaning layoffs. There's so many different variables and ways that things are going to shake out that's why we're going to see that wait and see approach. So I think sort of the takeaway here for consumers is rates are going to be elevated higher for longer, but we will see later in the year if we do get those 2 interest rate cuts.
And Kelly, there's also some developments regarding the partnership of U.S. Steel and the Japanese firm Nippon Steel. Where does that stand?
So it looks like the deal is done. That was announced today. Specifically, Nippon is going to invest $11 billion in U.S. Steel. That is some much needed cash for this business. And of course, we do know one of the president's aims here is to revitalize the steel industry in the country. We also know that they are going to keep the headquarters in Pittsburgh. That was a really big sticking point on the deal. People wanted assurances they were not going to move that out of the country. It's going to create 100,000 jobs, and they have agreed to not move some of these U.S. jobs that currently exist offshore. The thing that really stuck out to me, Meg, I used to work in mergers and acquisitions. This is the first type of deal that I have seen from the government where the president will have to give his consent for any major job changes of people coming from here and going over to other places, any name changes. It's a pretty interesting structure and potentially a precedent for other things like this in the future. But certainly a win for the steel industry at the highest levels to have that staying here and that much needed infusion of cash, Meg.
All right, Kelly O'Grady covering it all for us. Thank you so much.